please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Mitesh Thakkar, Sudarshan Sukhani and Prakash Kaba with us this Thursday morning to take us through what could be an interesting day of trade. Good morning, gentlemen. Sudarshan, yesterday we had quite a bit of slip in late trade, especially on the Bank Nifty. What's the trade for the day today on the Nifty and the Bank Nifty?
Well, today is a difficult day. The Bank Nifty is facing resistance at higher levels, somewhere around 25,800. The Nifty is now facing resistance at that critical 10,500 mark. That resistance is not overcome. Yesterday was a very good day for the indices to cross that hump, but that did not work out. So I would suggest that today's trade is primarily to close your long positions in both the indices. Now, for a swing trader, there are two new trades open up, and that may not happen today. One is if the Nifty crosses 10,500, re-enter and buy that breakout. If it dips to 10,350, and that's about 95 points from where we closed yesterday, that's a buy on dips opportunity. But within this 150 point range, exit your long positions and expect some choppiness to happen. That more or less applies to the Bank Nifty. The Bank Nifty unfortunately also could give us short selling opportunities today if today's early morning levels are not maintained. I don't actually trade intraday, but I guess that could be one option. That would be an intraday trade only. But essentially, the Nifty and the Nifty Bank should both be avoided for trading beyond unless these levels, a dip or a breakout, are achieved.
Sudarshan, can you repeat your Nifty Bank upper bound and lower bound?
Yes, the Nifty Bank has resistance at 25,800 approximately, and support at 25,400.
Okay.
So this 400 point range which is not being broken, we should simply step aside within this.
Okay, fair point. Coming back to you for stocks, but first Mitesh, good morning to you. How are you trading the two indices intraday?
Good morning, Lata. We've been having long positions on the Nifty and the stock side, not on the Bank Nifty. And I think, very clearly, it looks like that the earlier highs will, give some kind of a supply pressure. So my sense is that we might go into a consolidation for next few days. 10,375, 10,500 should be your trading range. And then eventually I do expect an upside breakout. Having said that, I think therefore the buying should be done around 10,400, 405 levels with a stop below 10,370. And on the upside, 10,490, 500 should be a profit booking target. That's the strategy broadly for the next few days. So buy on dips is what I would suggest.
Okay, buying on dips is what Mitesh would suggest. Prakash, good morning. Good morning. Your thoughts on the index?
Good morning, Anuj. Well, Nifty, when we saw yesterday, was a new high, but not a breakout. We need a breakout. It should either trade through it or just break away gap. That has not happened. But so far, the trend is still intact up and has not been compromised. The technical targets are 10,513 to 10,555. But the problem is there's a rough patch on Nifty. The rough patch on Nifty is between 10,420 to 10,480. That's no trade zone. But where do you trade? But there's a strong support at 10,400 as well. So you can't short Nifty. If it opens high, you can short Nifty for up to 10,400 zones. But if it opens closer to 10,400 zones, perhaps there's a buying opportunity there because we are back into a trading range. Looks like a consolidation and it's more of a rough patch area. As far as Bank Nifty is concerned, I think the trend is still intact up, has not been compromised here as well. 25,800 to 26,000 is a possibility. But the rough patch on Bank Nifty exists between 25,660 to 720 zones. These are the zones to avoid. It would be prudent to short Bank Nifty for around 50 or 70 points, but that's only for intraday. Best avoid it. Let's see where we get a bounce.
Okay. Sudarshan, coming to your stocks, but before that, one more macro question. Crude. Have you studied the charts lately and where is that one headed?
I'm sorry, which one?
Crude.
Oh yeah. Yes. Crude is headed higher. It does appear that, and that's not, maybe that's not very good news. But the breakouts in crude do suggest higher levels. I don't know the levels. I can't. That patterns do not give targets, and we don't understand crude very well.
Okay.
But it's not coming down.
Well, almost everyone who has studied crude over the last 50 years, and that includes Jim O'Neill, who I think did several research papers on crude, continues to say no one understands crude very well. But it's just that it's gotten closer to 65, 64.5 at this point in time, which is why I asked you if there is a further up move over there. Your stocks today, Sudarshan?
Well, Asian Paints, which has gone through a deep correction and now suggests that there is support coming in, is a buying opportunity. It's a short-term momentum trade. Colgate is a much better chart. The stock is finding support repeatedly at lower levels and willing to break higher. It's also a positional trade, apart from, of course, anything on a smaller time frame. Indigo, one day Sonia asked me whether a Jet is good, and I said Jet and Indigo, which we are forgetting, is probably having a very attractive chart. We are now buying on a dip. So Indigo is a buy on dip, and I would expect it to go back to its 1300, 1350 levels eventually. Our day trading targets are always more modest. So 3 buying ideas. The markets are a little confusing today, which is why the indices also have the same commentary. 2 short sells. One is Union Bank. All the PSU banks have given up all the gains that they had on that one day, eventually, slowly and steadily. And the second short sell, all short selling should be done intraday, is Sri Infra. Sri Infra had a big rally. It's given up 25% of its value. There is more downside here, but does take the intraday trade on the short side.
So Darshan, I admire your restraint and not saying "I told you so" when you referred to the PSU banks. I know you've always not believed in that rally.
Okay, of course these stocks have corrected after that huge rally. But Mitesh, what's on your list? What stocks are you backing?
Yeah, so I also have a mix of buy and sells, 3 buys to 2 sells, and both these sells are on the banking side. HDFC Limited, I think the intraday charts are showing some profit booking and correction. So sell with a stop at 1710, look for mild declines to about 1660 kind of levels. Very similar setup happening on the charts of IndusInd Bank, but the intraday pivot is at 1655. So if it breaks that, go short for a 1-2 day kind of a trade, keep a stop at 1671, look for targets of 1620, and 3 buy calls. Colgate features in my list as well. I think the indicator setup has turned quite positive, so buy with a stop at 1067, look for 1120 as your target. NCC, fresh swing breakout, the longer term charts are very good. I think they should see more momentum. That's a buy with a stop at 125, look for targets of 135. And finally Marico, after a long time on the buy list, some bullish candlestick pattern there, so buy with a stop at 311 for targets of around 335.
Okay, thanks a lot for that, Mitesh. So Colgate is common to both of them and it's a buy. Prakash, yours?
My bias is up, so I've got all 4 buys here. I'll start with DLF, trading at a new high. So perhaps we can see a move closer to around 260 zones, stop below 237. L&T looks like a good base formation. It showed its face up yesterday. It can nudge higher here. Target on the upside is 1256, stop below 1222. NIIT Tech was a buy yesterday as well. Seen a good bar yesterday. Looks like it can proceed up to climb to levels closer to 660 zones, stop below 622. And finally, Tata Elxsi. Seen a good move from the base lower to around 920 zones. Can climb to levels closer to 985 zones, stop below 948.
Okay. Thank you very much for that, Prakash. Now, the inevitable question I would ask any of you and all of you is RCom. What a rally that stock saw yesterday. Sudarshan, how would you trade it today, if at all?
No, I wouldn't do that. I don't understand these rallies. The RCom is in a major bear market. Good for everyone who wants to trade. I would do nothing.
Okay. Mitesh, you want to take a jab at this one? Because there'll be a lot of people sitting with positions there and mostly on the long side.
See, in fact, the entire ADAG group Lata did very well, and
Yes.
we had a buy on Reliance Capital yesterday. I've not been tracking RCom very regularly, but I think yesterday evening I did have a look at the charts. It does appear that some kind of short-term trigger has been activated over here. 18.5 was the target. I think it's met an intraday high of 1845. But if it crosses that, I think 20.5, 21 could also be tested. I'm not sure of levels beyond that. So I think there's some more steam left, but maybe 1-2 days of pullback might happen after this big rally yesterday.
Okay, gentlemen, we'll do one thing. We'll take a break on that note. We are coming back. There'll be Sandeep Shenoy of Pioneer Investcorp who will be joining in with some long-term stock analysis. We will also have a couple of these buzzing corporates joining us in a bit. A break for now.
Let's take a look at the Asian setup this morning. It's indicating that we could have a bit of a soft start because most of the emerging markets are a bit down at this point in time, except for Hang Seng, which is actually in the green now. So it will be interesting to see if we follow that or if we follow the rest of the markets. Hang Seng now, in fact, up about 100 points, and maybe that's led to the SGX Nifty also recovering a bit from the low point. But for us, there's a big domestic trigger that we are tracking today. It's been 7 years, of course, of that report that we had from CAG, led by Vinod Rai, of course, where 2G became really the big explosive issue, and that left the UPA government in tatters and eventually led to its downfall. In a few hours, of course, we'll have the final verdict from the 2G court, and Lata is here to tell us what all we should be watching out for. Lata?
Well, Anuj, simply because it is, as you pointed out, 7 years ago that this started, we just thought we'll tell you the main lines to remember, the main facts of the case. The scam, if you can call it, because that's the easiest way it is remembered, began on November 16th, 2010, when Vinod Rai's, at that time, the Controller Auditor General, his report said that the spectrum licenses 2 years ago were given away at throwaway prices. Now, Vinod Rai thought that they should have actually got the country 1.76 lakh crores. So it's almost a 2 lakh crore scam that he was pointing out to, whereas the country had actually sold those licenses for only 1651 crore rupees. The next big event happened when the CBI started investigating the case, and then in April 2011, it filed the charge sheet naming the telecom minister at that time, A. Raja, as well as the senior bureaucrat in the telecom ministry, telecom secretary Siddharth Behura, and a whole host of corporates. We will come to the corporate names in just a bit, but the important point is February 2012, that was the next important date when the Supreme Court cancelled 122 licenses given to 9 telecom operators, saying that the licenses were given in an arbitrary, capricious and in a manner contrary to public interest, leading to a loss for the country. And then the court appointed the special 2G court, led by Justice Saini, to hear the cases, because it was an extremely specialized case and it was an 80,000-page charge sheet that the CBI had filed. So obviously the Supreme Court couldn't handle it. The accused, as far as corporate India is concerned, included officials from Reliance Telecom, Swan Telecom and Unitech Wireless. Some of the officials were also taken to custody during the time of the investigation. Of course, A. Raja and the DMK leader Kanimuri were also taken into custody at that time. The supplementary charge sheet filed by the CBI included other corporates as well, and that included officials of SR Teleholdings and Loop Telecom. But since they're not listed, that's not the most important point that we are going to watch from a market point of view. And finally, today, of course, is the culmination of that 7-year-long case where 164 witnesses have deposed before the 2G court. So it's a seminal hearing. It will give a verdict on bureaucrats, on politicians, will have an impact on political fortunes of the UPA as well, if there are any left in the days to come, and of course will also be important for some of the listed stocks. Of course, beyond that, the impact is not going to be too great, because ever since 2011, most natural resources, or all natural resources in the country, have only been auctioned. It started with the UPA and continued under the NDA. So the further impact on other stocks isn't there, but these stocks will definitely be watched.
Okay, Lata, thanks a lot for that comprehensive analysis. Of course, that's something to watch out for. It was for last decade remains, you know, the biggest sort of scam, as Lata said, the easiest word to use. But let's move on. And KCP stock hit a 52-week high yesterday with 16% gain. We have GN Murthy, CFO of KCP, now joining us on the phone line. Mr. Murthy, good morning. You know, the first question I have for you is there any resolution in terms of the sand mining issue in South India?
As far as the areas we operate, there is no such, we do not have any problem.
Okay.
In the area, we operate in Andhra Pradesh, and there is no such special issue to be resolved.
Okay, fair point. The stock's been excited, so just wanted to know if there's been any price hike in last 1 month.
Yeah, there is marginal price hike, marginal.
Okay, if you could give us the number.
Around 20 rupees, there is a price increase, but the prices are lower than the quarter one.
Okay. Good morning, Mr. Murthy. To come to the main business of the company, sugar, when does the capex, how much is the capex and when does it kick in?
Yeah, we have already completed our first stage of expansion from 6,000 TCD to 8,000, and it is already operational. We incurred about 250 crores, and we are further enhancing the capacity. These all in Vietnam, from 8,000 to 10,000, which will be completed at a cost of about 60 to 70 crores in a year's time from now.
Okay. The expansion is only in Vietnam, no expansions in India?
In India, cement we are expanding. It will be operational by October of next year.
Okay, which is what I was coming to. For cement, with this capacity expansion, what would be the outlook going forward in terms of your overall EBITDA and in terms of your overall margins as well going forward?
Right now, we are operating around 800, 700 EBITDA level. And we expect to continue that because the demand is continues to be better than last year, and we expect it to continue like that, especially considering the construction of the capital and other consequential related activities taking place around the capital, and also growth prospects in Andhra Pradesh and neighboring states. So our capex would be completed and operational in 18. We hope to continue to get the demand, and it should be on the same lines, if not better.
When in 18?
18 October.
October. Okay, so the price rise you referred to was for cement prices in Andhra Pradesh?
Correct.
Okay, how was it only in Andhra Pradesh, or do you also service other parts of South India?
In fact, 70-80% we sell in Andhra Pradesh, so I tracked Andhra Pradesh.
Okay, and how much was the price rise?
How much? Per bag of cement, it is around 20 rupees, but that is only latest. But it is lower than the quarter one, I said.
Okay, no, I'm asking you because, the stock ran up 16% in the past few days. So I'm just trying to figure out if there was any announcement in the last few days. How were your November sales? Were they very good?
There is nothing specific announcement from KCP. We watched the stock price. It is no consequence of any action from the management.
Okay. What about your two loss-making businesses, engineering and hotel? Can they turn around, or are you looking to sell them?
Yeah, no. Selling part I'll come to later. Engineering unity, Make in India, is helping us in foreign players supplying equipment in India, outsourcing to our unit. And we hope to do much better than what we did in the last 2 years. And the order book itself is growing up to 100 plus. And as far as hotel industry is concerned, now since the hotel is located in the center of Hyderabad, and the occupancy levels have shot up, and it is likely to break even at EBITDA levels in the next year.
Okay. Well, power is a much smaller business for you, but is it giving better returns, and do you expect a good second half?
No, in fact, power returns problem across the country is the 28% increase in the coal prices internationally. That is the main reason. Unless these coal prices come down, the scenario would be similar.
Okay.
But we expect to get some idle units generation in the current season.
You were going to tell us something about the sale of the assets, either engineering or hotels.
We are right now not planning for any sale of any assets.
Okay. What is the debt in your books?
About 360 crores right now.
Okay. No, I'm asking you because finance costs fell a lot in the first half of FY18. So did you reduce any debt?
Yeah, we reduced. We make the timely repayment of the scheduled debts, which were there on the earlier year's capex. And due to the reduction, there is substantial reduction. And also we got good loans for the expansion at substantially lower. Of course, they were not charged to profit, but they are at a substantially lower level. And the interest will be substantially better than earlier years.
Okay, just a final question, Mr. Murthy. You have two expansions kicking in. Your Vietnam expansion kicks in, and you will have the cement expansion coming in October. How much can overall sales or revenues increase in FY19 over FY18?
FY19 will be half year of commissioning of both the expansions.
Yes,
if we look at FY20 full year, we are expanding double the capacity, 1.8. We are making 1.5, another 1.5 of cement.
Okay.
So we expect in the same proportion increase in the top line of the cement.
Sure.
And on the sugar, we are expanding from 6 to 8. We have already done, and the season should be now should commence any time now. And 8 to 10,000. We are expecting 6 to 10,000 overall in the similar lines, but there is some small correction in the international price of sugar. Subject to that, we are expecting similar things.
All right, Mr. Murthy, thanks a lot for your time today. That's KCP's been a buzzing stock. But let's go across to Manisha Gupta now for a roundup of all the commodity market action. Manisha, good morning.
Morning, Anuj. Thank you for that. Well, there are lots of positive factors and that have led to fresh buying come in for the metal space. The profit taking that we saw from late October to early December really seems to be getting off. And this is unusual actually when you see the US funds making fresh buying in case of metal prices. But then that's the kind of data that you're looking at as well. The volumes have come back a bit. It is an average volume that what you would see on a monthly basis. So the weakness in US dollar, the US tax overhaul, the strong global growth numbers that we are seeing, the Chinese indicators, all of them on the positive side, and a fresh outlook for 2018-19 coming in sense of steel demand and the EV demand as well is something that is taking the metal prices on multi-month highs. So you have the copper and the lead prices trading at 2-month highs. You have nickel prices trading at a 1-month highs as well. And the markets are really looking at continued spillover in sense of buying, at least in the first half of 2018, and that seems to be supporting the metals right now. The crude oil prices in the meanwhile also are trading on the higher side. It has been the 5th straight week that you have the US weekly inventories decline, and by much higher margin than what the street was estimating, and that has been supportive for that as well. So while we continue to hold above $62 for the Brent prices, markets are eyeing 65 to 68 in the first month of 2018 as well. So very bullish cues coming in for most of the industrial commodities, whether it's metals or the energy pack.
Okay, thank you very much for all those details, Manisha. Crude yearly at 64.5 is something which I guess Indian markets will take note of. That perhaps is the most important number, though other commodities will be important. We have Sandeep Shenoy of Pioneer Invest Corp joining us now in our studios. Good morning, Sandeep. Always good to have you with us here. Well, first up, you heard Mr. Murthy from KCP. Cement prices have inched higher. Is there something in that sector that attracts you now?
Well, Lata, I think we have been always saying that this is one sector which over the last 1 year would have given decent returns, and there's a good possibility that the demand-supply imbalance, or I won't say imbalance, the dynamics could slowly tilt in favor of the suppliers. And quote unquote, you have been always taking serious objections to the word pricing discipline is there in the market. So I guess next 12 to 18 months, because of multiple capexes which the government has envisaged and has unrolled, and especially the southern 2 states which are now on a roll, you could see some kind of uptrend happening, and the next 12 months could belong well to the South Indian cement companies.
Okay. Good morning, Sandeep. The ADAG pack had a huge rally yesterday. Do you think there's value in buying some of these stocks here, or would you avoid this pack completely?
Well, I think high-risk stocks, when they give such kind of a bounce, it's more to do with trading aspects rather than anything else. Because when fundamentals are impacted, Anuj, to that extent, yes, the bounce backs what you get could be up till 50–60%, but one shouldn't use it as anything else other than a trading bounce. So for investors, I think we should look at stronger companies which have got better business metrics. These are going to be just trading bounces. Well, you can capitalize on it, but that's for a separate set of investors.
Okay. We just heard the KCP gentleman, Mr. Murthy, telling us about the rise in coal prices. How will you play this theme?
Well, I think trying to put a short trade in power sector, I think at the present junction, there isn't any scope for you. There is no headroom for you to put a short trade in that. But is it going to create a much of a problem for other companies, other sector where P&F, that is power and fuel costs are above 7 to 8%? I don't think so. So Lata, I think this, what they are talking about could impact everybody's EBITDA, especially those power intensive industries EBITDA by maybe 50 basis points. And I think in this kind of a situation that easily can be passed on or absorbed, because you have got that much you can say solace coming to you from the interest rate front. So I guess this is going to be a problem for power generators there, but it's not going to give you opportunity to short them. And whether it's going to create a problem for other manufacturing sectors, I don't think so.
You know, we are talking about a likely increase in fuel costs, both because of coal and because of crude. We also have, you know, crude being an intermediate for other products. The interest rates clearly are indicating that they, if anything, will be higher this next year than they will be this year. Would you say, therefore, all this is worked into the earnings? Will they not have some impact on EBITDA next year?
Well, Lata, I think for the last 4 years, we always start the year with one assumption, and somewhere in Q2 and Q3, the assumptions start getting impacted, and we are having some kind of downgrades in earning coming. Till in this year, till Q2, we haven't had. But yes, if crude maintains about $65, somewhere in middle of Q3, we could see some kind of a marginal downgrades happening. But for FY18, it could be marginal, but whether it will be, you know, like impactful downgrade for FY19, I think it's going to be still, the jury is still out on that. So I guess at the current juncture, it's not going to make much of a difference to the market. Everybody will be back to their Excel sheets and trying to figure out the impact. But right now, I think it's too difficult to take a call.
Okay. Actually, markets, mid-caps have been hitting highs every day. What could you be buying at these levels, Sandeep? Where is value?
Well, I think there isn't much value left in mid-caps. It's going to more from, rather from a growth perspective or from a value perspective. They have become momentum plays, which I think you are getting better options even in large cap. I mean, the large cap auto, one of the auto companies give you substantial return in the last 6 weeks. So I get when you get such kind of option in a leverage play, it doesn't make sense for large deep pocket or hedge funds or those kind of investors to delve down the or drive down the market cap sweepstakes to get into the second rung and third rung mid caps. I guess it's some kind of anomaly there that will get ironed out. But for investors or deep pocket or institutional investors, I think options in large cap are far better.
Okay, stay on, Sandeep. We have some more questions for you. For now, we have one more management joining us. The Elecon Engineering stock has been up and about in trade with 38% gain this month, up 21% just this week. Patel, CMD of the company, is with us now. Mr. Patel, good morning. You know, last time you had told us that there was some headwinds in overall business. Have they started to improve? Because, you know, your stock price has been, you know, on a bit of a surge of late.
Good morning to all of you. Yes, as you had said, that the headwinds are reducing, and we are seeing more inflow of orders coming through. And probably that is the reason why we see that things are improving even in the stock market for us. There are also more orders in the pipeline which are likely to come through very shortly. So considering all this, the market seems to have appreciated the efforts put in by us.
Pricewin, if you can give us a few numbers. How much has the order book improved, say, last 12 months compared to what it is now?
See, we are up by almost 15 to 20%.
Okay. Is this sufficient for you to report a profit in the second half?
No, not sufficient enough. We still need more orders, but there are a few hefty orders in the pipeline, which are likely to get finalized in a month or two. Okay,
and what's the quantum of those orders?
Sorry?
What's the quantum of those orders that you said that will be finalized?
They are about 180 to 200 crores.
Okay, and what kind of margins do these orders come at?
They come with reasonably healthy margins because we have been very selective in what we have been getting in the past few years because of the recessionary trend. So they are with reasonably good margins.
No, I'll tell you why I guess Anuj is asking this, because in the first half, your margins were what, 3%?
Yes.
Okay, so what would be healthy? Will you be able to report what, 6% in the second half?
It will all depend on what orders come through.
Okay.
But what we have quoted are 5% plus.
You know, looking at what you're saying, that, you know, orders, hefty orders in the pipeline and orders you have already received, which you say are 15 to 20% higher, when do you think you will be in the black?
We expect that the first quarter of next year will be very healthy for us.
Very healthy, as in you will be able to report profit?
Yes.
Okay. All right, Mr. Patel. Thanks a lot for your time today. That's Elecon Engineering. I mean, it's been a year of mid-cap, so one more mid-cap which has done phenomenally.
I think you have to put on the table that it is a loss-making company.
It is exactly.
16%.
Exactly.
But then he says that 2 quarters from now, he expects to be in the black. It's just important for everyone to realize that you're talking about a company that for the last few quarters has been reporting losses.
And the stock's up 91%. But anyway, we'll take a break on that note. Up next, of course, we'll have the pre-opening rates.